when we see Bitcoin hit new all-time highs, it creates headlines and puts it back on people's radar. And that in turn, I think, gets people more excited about the asset class again. And so there's a famous line, I forget who said it, but sometimes the price is the product. And I think sometimes for Bitcoin, that is definitely true.
For more on the market's action, let's bring in DragonFly partner Tom Schmidt. Hey, Tom.
Hey, thanks for having me.
Thanks for being here. What an exciting week it's been in crypto markets. Everyone's sitting on the edge of their seats waiting for Bitcoin to hit a brand new all-time high. What are you watching this morning?
Yeah, it really felt like last night everyone was just crowded around their monitor, watching Twitter, watching the charts, and you could kind of feel it. I think, I, like a lot of people, have been surprised by just how short-term bullish the ETF approvals have been. I think we obviously expected this to be a long-term benefit for the space in terms of flows, in terms of institutionalizing the asset class. But overall, I've been really amazed just by how well Bitcoin and crypto overall have done, especially given kind of the macro environment. I think people were expecting more cuts earlier this year, and now we're projecting maybe even no interest rate cuts in 2024. And yet crypto continues to do well in the face of all of this.
Tom, I got to ask you if people actually care about these all-time highs. You heard me read gold is reaching all-time highs, the S&P 500 we talk about every day on this show as well, approaching all-time highs, and Bitcoin approaching its all-time high. Is this something that we only care about in this industry? We don't talk about other asset classes like this.
I think it's a bit like the halving, where maybe there's some mechanistic component to it that influences supply or influences pricing. But in reality, it's much more of a sort of reflexive crowdthink kind of moment where people, it's almost a self-fulfilling prophecy where the halving in turn creates a sort of a mimetic desire for Bitcoin. And I think similarly, when we see Bitcoin hit new all-time highs, it creates headlines and puts it back on people's radar. And that in turn, I think, gets people more excited about the asset class again. And so there's a famous line, I forget who said it, but sometimes the price is the product. And I think sometimes for Bitcoin, that is definitely true.
The halving is one of the big catalysts everyone's watching for that is anticipated to happen in April this year. What are you watching out for there?
I think for us, obviously, we look at, we're not massive Bitcoin investors. We're more of a sort of pure play venture fund. But certainly things that happen in Bitcoin affect the rest of the market. We have one portfolio company in particular, Alchemia, that's launching Bitcoin hash rate futures and allowing miners to basically hedge out their potential volatility in future cash flows. Obviously, the halving impacting miner revenues pretty substantially. And so they're looking for ways to basically hedge volatility in their block space, especially with the rise of things like ordinals and inscriptions. Also, obviously, contributing pretty meaningfully to their revenue, but not being as sort of sticky and durable as block rewards, which are obviously being affected in the near future.
Let's talk about what you're doing over at DragonFly. Infrastructure was a really hot topic for a long time when it came to investment. Previously, in the last bull cycle, Web3 and Metaverse was really big. Where do you see investments focusing on as we head into the next bull cycle?
Yeah, I think for us at least, a lot of our investment over the past year or so has been on smart contract scalability. So new layer ones and layer twos, and just overall novel ways to scale smart contract platforms to serve the next billion users. Interoperability has also been a really hot topic, as we've seen. People looking at things like shared sequencers, new cross-platform message passing platforms, things that allow you to use these different blockchains that are popping up really seamlessly and really easily, just as you would use a centralized exchange. DeFi has been, as we've seen, a little bit of a resurgence, mostly in sort of the stablecoin area. Tether just hit 100 billion in outstanding yesterday, which is pretty impressive in no matter how you think about them. And I think on the consumer front a little bit as well, we've seen a couple of these sort of, I don't want to call them CDFI, but sort of hybrid platforms that use stablecoins or use crypto to fiat on-ramp and off-ramp, things like Rollbit, things like Shuffle, and just overall have a really massive demand, or have a really massive way to support new consumer demand for these kinds of products.
Now, I have to ask you, as we wind down the interview for this show, about meme coins. They've been wild lately. Pepe and Doge have been in the spotlight. Are you watching what's going on with meme coins at all, or is that just, what's happening in the sidelines with all of the degens?
I am watching, although I will say for DragonFly, we are not. We are also watching and not necessarily participating. I think, every bull market, every rally brings a lot of this sort of irrational exuberance. And I think that the animal spirits of the market manifest in different ways. Sometimes they're, pictures of apes. Sometimes they're coins that are represented by apes. But I think overall, it sort of subsidizes a lot of the infrastructure and a lot of the investment that's being done to allow people to trade meme coins or do whatever else they want to do really safely, really cheaply. And so I can't really speak to it as an investment product, but I think it's cool to see people be able to do whatever it is that they want to do permissionlessly on a blockchain.
If you had to pick out, I want to say the biggest misconception when you look at the markets right now, is there something that you can pick out, something that stands out that investors and traders should be aware of?
Yeah, I think a lot of people look at this cycle and they think, oh, it's all beta again. It's all sort of macro driven. I think, again, as we've seen, this is outperformance in the face of a pretty dire or pretty negative macro environment. And we've also just seen re-rating and repricing of these assets. Obviously, Bitcoin, approaching all-time highs, and a lot of alts are as well, but other alts are not. A lot of alts are still, 70, 80% below their 2022 highs. And so I think, again, there is this misconception in crypto that, hey, they all sort of trade in sync together. Price goes up, price goes down. And in fact, we're seeing the market really mature and develop and learn how to price these assets individually. And that is now getting reflected in the spread between different asset prices.
On that topic, I mean, with the approval of the spot Bitcoin ETF, would you say that crypto markets are even more correlated to traditional markets now than they were before, and that investors should be watching that macro environment even more closely than they were before?
I think certainly, crypto is receiving some of the inflow that would maybe normally go to equities or normally go to bonds. But I think, again, even in traditional equities, most of the rally this year has been from, the Magnificent Seven or the Fab Four, however you want to think about it. If you look at things like, the Russell 2000, really that long tail of tech companies, smaller cap companies have really not seen outperformance. And really, they're still, pretty far below their 2022 highs. And so crypto is very similar in that, quality assets that can catch a bid, that people can underwrite, that people get excited about. Those ones are doing well, but it's not sort of this broad wave of re-interest in the category. It's being really segmented this time.
You mentioned interest rates at the top of the interview, and I want to talk a little bit more about the macro environment. It's looking like we're not going to get as many interest rate cuts as folks were once hopeful for. What are you watching from a macro perspective, and how do you think that might impact the crypto markets as we move further into 2024?
Certainly, I think our expectation, and a lot of people's expectation, was that we were going to be in the doldrums for a while, but until we got to a period where inflation was lower and the Fed was in a safe place to cut interest rates. I think we've been surprised just by how quickly this rally has started, in part because of the approval of the ETFs, but I think in part there aren't a lot of other attractive asset classes out there. I think we've seen a lot of the issues with things like private credit, equities. A lot of people feel are very overpriced, and so I think from a macro perspective, there is a little bit of there is no alternative sort of phenomenon going on with crypto where people look at their portfolio and, hey, it can't hurt to put 1, 2, 3, 5% of their allocation into crypto. If that goes into Bitcoin, if that goes into ETH, if that goes into other types of products within the asset class, whatever it may be. But overall, I think it's underwriting and institutionalizing the asset class and making it more palatable to a wider suite of investors.
And lastly, before we wrap it up here, is a recession looming?
I certainly hope not. I think we're optimistic that the Fed will hit a soft landing, and the macro environment will look a lot better going into 2024 and beyond. But as always, we've seen surprises can come out of nowhere, and so you try to predict the future the best you can and play for it. But always be prepared for the worst.
Tom, thanks so much for joining the show this morning.
Thanks for having me.
That was DragonFly partner Tom Schmidt. That's it for today's show.